We are delighted to welcome you to our second session of CA Tax Talk, the platform where we discuss, simplify, and clarify the most critical tax developments. Today's discussion is particularly important as we explore the evolving landscape of Sri Lanka's VAT reforms, focusing on the changes proposed in the VAT Amendment Bill in last February 2025. This is Krishnaveny, and to lead this key discussion, we have none other than Mr. Suresh Perera, a tax specialist in Sri Lanka. Welcome, sir, to our CA Tax Talk. So these new amendment bills, that suggested a lot of changes. So from the several changes, the main change we look into that, the removal of SVAT, introduction of risk-based refund system. So, sir, this has shaken the exporters that we have seen them voicing in the public platforms or the social media. They have raised a lot of concern on that. So, sir, could you please shed on some light that what these exporters stand to lose on this transition?
Okay, first let me tell you a little bit with regard to the SVAT, what exactly is the SVAT and the role of the SVAT in the Sri Lankan VAT regime, right? So what is VAT? VAT is considered a superior tax compared to the turnover tax because of many features, but at the same time, the VAT also can have drawbacks. So in many countries where the efficiency is lacking, you can see that has created a problem where most of the taxpayers find that they don't get their refund on time. So as you know, basically what is VAT? VAT is the tax on the value addition. So how do you calculate the tax on the value addition? It is the output tax minus the input tax, and the difference between the two has to be if the input tax is higher than the output tax, they are depending on each country's rules, there will be a refund mechanism embedded in their statutes. But to implement this thing, you need to have proper efficient implementation system. Where the implementation system is not that efficient, the VAT refund starts building up. So not a unique thing in Sri Lanka. In many other countries where other systems are not up to the standard, you do find this VAT refunds building up. So that is the drawback. So in 1998, Sri Lanka introduced the concept of the tax on the value addition under the name of the goods and services tax, and thereafter only this this was renamed as VAT in 2002, and then we had up to 2011 this problem Sri Lanka also demonstrated in our system, right? So in order to, in fact, it was I used to say a national problem in Sri Lanka for the corporates, because there were so many companies suffering due to their cash being stuck at the Inland Revenue Department due to the delay in refunding. So then when somebody invented this method called the simplified VAT, people who are experienced in the system will say it is definitely not simplified, but it created a solution for the problem that we had. Yes, exactly, the delay in refunding the cash, where specifically the exporters were suffering, where their cash was stuck at the Inland Revenue Department. So this gave a solution. So this actually created a solution for a huge problem that we had in Sri Lanka with regard to the VAT regime. In fact, I would say that we should be proud of the SVAT system that was how they say invented in Sri Lanka, because this is actually a solution for other countries that are suffering from the delay in processing the VAT refunds, right? So the question here is now, so I think during the last 10 years, we saw while it provided a solution here and there were attempts to abolish the SVAT system also. So then what happened was, as we know that when Sri Lanka faced the financial crisis, and then the IMF reached out to Sri Lanka to give funds for us to come out of this financial crisis, and as a result, they also have a say with regard to the Sri Lanka's tax system, the roadmap. So they came up with various proposals, the recommendations, and we have seen in the reports IMF come up with regard to the integration of this program, setting out the road map for the tax system in Sri Lanka also. So the initial one that I observed is in their report, they have recommended that to implement an efficient tax refund system, VAT refund system, and thereafter abolish the SVAT. Right? So now the question is, who suggested the removal of the SVAT system? Actually, is that a problem that we are facing? Right? So now, when you look at the IMF report in 2024 June, this is in item number 26. So in the report, you can see IMF's recommendations are listed, and thereafter another set of points are also listed under the heading, yes, the views expressed by the authorities. So item number 26 is under the views expressed by the authorities. So it indicates basically it is not an IMF recommendation. It is somebody in Sri Lanka who had suggested, and the wording clearly point to that.
So it's really good, Suresh, that you have pointed out. Actually, most of us know, we all think that all the tax reforms are introduced by IMF. I mean, it's directed by IMF. It's one of that SVAT removal also must be through IMF. So now it's clear that it is not through IMF.
Correct. It's not recommendation by the IMF. It's basically local authorities have requested for the removal of the SVAT, and that is what we see when we go to the IMF report itself.
So then, Mr. Suresh, what is the arguments or the support they say why the SVAT should be removed? So because I feel that removal of SVAT or simplified VAT refund scheme is like we are going back to cash, from cashless to cash. So what is the argument for them to support the removal of SVAT system?
Correct. As you rightly pointed out, SVAT system is a cashless system. So there is no room for corruption. Whereas the normal VAT system is cash refund system, and wherever cash is involved, one can see there are many problems that stem from that. And in fact, we can recall somewhere in 2009, Sri Lanka witnessed one of the biggest tax frauds in Sri Lanka, also not only in Sri Lanka, in the South Asia. So now what is happening is, okay, we are trying to move from a cashless system to a cash system again. So yes, as a repercussion, we may experience again, say, the rent seeking, the corruption coming into the system also. But it's not exactly the rent seeking aspect that I'm trying to point out. This will take us back to the situation pre-2011 situation. That means within a short period, refunds being built up and cash flow issues being faced by the exporters, and consequently the exporters getting weakened. And that's going to create a huge national issue, not only an issue for the exporters. I say it's a national issue because, as we all know, we are living in a vulnerable economy in Sri Lanka. And if we don't get our strategies correct, we can have a not so good situation in the future also. And we have to keep in mind what is the biggest challenge that we have. By 2028, we have to start serving our debt. Right now, we are in honeymoon period. So during this period, we should prepare, develop our industries, develop our export industry, so that we will have a strong economy to meet the challenges that will come after 2028. But this move, in my view, I think most of the viewers will agree with me, is going to weaken the exporters. And this can create a huge issue for the Sri Lankan economy come 2028.
Yes, as for the current economic context, we are trying to attract more FDI. So these kind of concerns in the public platform may create a challenge to government to attract more FDI as well, especially in the export sectors. So apart from that, Suresh, that what are the repercussions can cause for our economy due to this? Because it's obviously an issue for the exporters' perspective as well. As you said, they will encounter these cash flow issues. But for the economic perspective, what kind of repression can happen removal of this SVAT?
Correct. So that's what I said. Now, let's recollect what happened a few years back in Sri Lanka. There was a decision that was taken to go for organic fertilizer only, a policy that was introduced, and advised the government to do so. But today, we can't find a single advisor who advised the government to do that thing. At the time it was being suggested, I can recall certain people objected, subsequently pointed out the consequences, but it was not heard, and the worst case scenario took place in Sri Lanka. So I see a parallel to that policy here also. This advice to abolish the SVAT system, in my eyes, is the same as the advice to go for the organic fertilizer policy in Sri Lanka. So this can have repercussions not only for the exporters. Right now we do hear exporters sounding the inconveniences, the disasters that they as industry facing. But this is going to be a issue that will affect the entire national economy. So this is going to affect the nation. So that's why I say that this is not a problem confined to the exporters. This is a problem that can have an impact on the Sri Lankan economy. So the policymakers have to be mindful when they are taking this decision.
So you mentioned that IMF has recommended them to have an effective system in place before they move to abolition of SVAT scheme. So in that sense, that how Sri Lanka is ready to do that? I mean, in terms of have a proper effective system, is this all digitalization of VAT refund scheme, or what kind of readiness they have so far to move for this removal of SVAT?
Correct, yes. As rightly pointed out by you, in the initial report of the IMF, what they have suggested is first establish a effective refund mechanism, thereafter abolish the SVAT system. But to us, what we see is that establishment of the successful or the efficient refund system is not happening, or rather has not been established so far as of today. And there is a proposal with regard to creating a pilot project, but then the order is wrong, meaning we are putting the cart before the bull here. Yeah. So first demonstrate it is possible to have a efficient refund mechanism, and thereafter abolish the SVAT is what the IMF in the IMF report that we see. Right. So now I think according to the bill, we are going to abolish the scheme in October, but to date we have not seen effective refund system that has been established as of today. So there is information that we are going to see a pilot project taking place in July, August, thereabout. But then the question that many people ask is, what if this pilot project failed, but there is no option? We have to still go for the abolition of the SVAT, and then go back to the cash system, or what I would say the inefficient refund system that we had. So this is going to again bring the problem that we had before the 2011 scenario.
So this is not the correct time for us to test and try. So we have to do the pilot process first, then decide at which point we can abolish the SVAT scheme.
Exactly. That is what IMF report pointed out also.
So this introduction of risk-based refund schemes, many countries they have in place also, but we are not familiar with this concept. So could we shed some light on that? What it is for us to understand?
Okay, so it's like this. In the VAT bill, which was challenged before the Supreme Court, there are certain indications with regard to this scheme, right? So we have, first, this is going to be only for the exporters. Out of the exporters also, only the selected ones will be subject to this scheme. So this scheme suggests refunds will be issued within 45 days, and in case of others, the 6 months rule. So so you have the exporters. Exporters mean the direct exporters, not the indirect exporters, not the deemed exporters. So out of the exporters also, not all the exporters will be given refunds within this 45-day period. There will be a category called eligible exporters. So who are the eligible exporters? Those are the exporters whose exports constitute 50% or more from the total turnover, right? So not all those eligible exporters will also be getting the 45 days refunds. It will be the ones who will be categorized out of these eligible exporters who are considered as low risk or the medium risk category. So there will be three categories: high risk, medium risk, and the low risk. It's the low risk and the medium risk that, according to the current proposals, will be eligible for the 45-day mechanism.
So how will
So
they...
up to 45 days. So that
Yes,
means
okay.
it's not 45 days. So sometimes it could be even 20 days, 50 days, 50 days also.
On which base that risk being assessed? I mean,
Okay. As of now, I think what they're suggesting is according to the compliance history of the these eligible exporters will be categorized using taking into consideration of their compliance history, their registration, their filing status, etc. Will be taken into consideration. I think as of now they are looking at a period of 12 months. Earlier it was 6 months, but I know what I hear is they'll look at a period of 12 months.
so as this bill mentioned, Mr. Suresh, that it proposed that refund should take within 45 days. So as you said, under this risk-based scheme, so 45 days not for all the people, but it for the eligible exporters. Under the eligible exporters, even based on their risk grade, the 45 days will be applied.
Yeah, that is what we understand as of now.
Then we'll move on to the next change proposed in that VAT Amendment Bill, that is the VAT on the digital services provided by the non-residents. So, Mr. Suresh, in this, is there any reason why it's VAT on the digital services or VAT on the electronic services? Why it's not tax on the electronic services? So, why it moved to the VAT?
Only VAT you're asking. Okay, so again, let me give you a detailed answer. This is the current tax frameworks in most of the countries do not address this modern e-commerce or the services provided by digitally, etc. are not covered. Because of that, we do find non-resident digital service providers deriving income from other jurisdictions, other countries, but not being exposed to pay taxes in those countries where they derive money from, revenue from. Not only VAT, so they are not liable for, let's say, the income tax, because this concept of the permanent establishment has been designed to address the brick and mortar businesses, not this kind of modern businesses being carried out with the aid of the digital platforms or the electronic mechanisms, etc. So now, in order to address this flow of funds from each country to another, to a service provider in another country, many countries started devising their own systems, own tax rules. In order to create a uniform set of tax rules with regard to the taxation, OECD intervened, and that's what we hear about when we say about the Pillar 2 or the global minimum tax, etc. Basically, those are the results from this due to this movement. Now, so when you say that thing, you are trying to address in a particular jurisdiction, you can have many taxes: income tax, VAT, maybe a turnover tax, etc. Right? So, two mechanisms we do find in the worldwide. So that is basically modifying the existing tax statutes like the income tax or the VAT statutes being modified to capture taxes under those existing tax statutes. The other trend that we see is coming up with a unique tax statute like digital services tax concept, new statute to capture them into the tax net. Certain countries have hybrid mechanism also. You modify your existing tax statutes and also come up with unique tax statutes also, So India is a good example for that.
In that case, Mr. Do you agree that this proposal creates level playing field, ensuring both local and non-residents providing same digital services?
So when you say basically many tax statutes, or rather basically when you take a local entrepreneur who is rendering his services using digital platforms, they pay income tax, VAT as well as the SSCL. Whereas when a non-resident digital service provider is getting taxed only in relation to the VAT, but not the income tax, not the SSCL, that will not create a level playing field, but still it's a step in the right direction. So the question here is, to me, how are we going to collect VAT on the services provided by the non-resident digital service providers using electronic or the digital platforms? So that mechanism is crucial. Are we going to look at changing our charging statutes? Because according to our charging section, it's the supply of goods and services in Sri Lanka and the importation of goods, not the importation of services, are liable. So are we going to extend it to capture the importation of services and maybe introduce what is called the reverse charge mechanism and then try to collect the VAT from the consumer? This reverse charge mechanism actually is appropriate for business to business import of services, not exactly B2C, business to the consumers, because it's impractical to expect the consumers to comply with this payment obligations on behalf of the non-resident digital service provider. So what is the mechanism that we are going to see here in Sri Lanka? Is that going to become an alternate one? Is okay, have a withholding mechanism. Is that practical? So what is this mechanism that we will be following in Sri Lanka is still a mystery. And so something interesting happened in relation to this also. One of the parties, in fact, challenged the VAT bill in the Supreme Court of Sri Lanka, and Supreme Court has determined, or basically to give a deferment till the October to come up with the mechanism so that it's known, so that then the relevant party stakeholders can prepare for it, and the implementation to take after October is what is there. So as of now, the VAT bill has not been made into law, right? So that's something then we have to keep in mind.
So when we are talking about this VAT on, you said the import services to be included for the VAT purpose. If so, here we have limited to only the digital services, but it not extended to the other services. It may be consultancy services or IT services or any intra-group services. So is there any reason it's limited to?
No, I won't say that it has not been extended. It's a budget proposal that referred to the digital services. So what is exactly the definition of digital service? The way in which the section 2 of the VAT bill has been amended. So what they have done is there was A, B, and now the third limb C has been introduced. So within the framework of that, whether normal services could also be captured is what you have to see. Still very you can see what will be the committee stage amendments that will be introduced to this bill when it is being passed in the parliament. So I understand what the example that you're talking of is, let's say an online educational provider in Sri Lanka who is an entrepreneur in Sri Lanka is liable for normal taxes, income tax, the VAT, the SSCL, etc. But let's see another party from educational provider from India using an electronic platform or digital platform is providing the same service for the Sri Lankan consumers. And as of now, they are not paying taxes. So there's no level playing field. I think that is what you are referring to.
So now I think we have come to the end of this session. Do you have anything else that you want to share, especially that suggestion for this abolition of SVAT scheme?
Yes, so my recommendation with regard to the SVAT scheme here is, in my eyes, what I see is things are happening in a unprofessional manner. Somebody managed to get this concept of abolition of the SVAT into the IMF reports. So as I pointed out, this is not a recommendation coming from the IMF, and other stakeholders were not listened to by the IMF. And as we can see, there is wide opposition with regard to the abolition, and there is merit in what they are saying. So what I would suggest to the government at this juncture is, let's take a pause, appoint a committee, listen to all the parties, and thereafter take a decision, maybe either to improve the current SVAT scheme or abolish, but not at this juncture. So defer it maybe by 2 years, because from the point of the government, Sri Lankan economy is in a vulnerable situation, and we don't want to worsen the situation by weakening our export sector. As I mentioned earlier, building our export sector, strengthening our export sector is crucial for us to meet the challenges that we are going to face in 2028. So in short, my recommendation is pause, defer the abolition of the SVAT, appoint a committee, listen to all the parties, thereafter make a decision as to the fate of the SVAT. Don't be in a hurry to abolish, because in my eyes, this is a train that is going to hit a wall, bringing disaster to the Sri Lankan economy.
Thank you, sir, for taking time, provide us clarity on the proposed VAT Amendment Bill. We will share further updates once the bill is passed in the Parliament with more details. And thank you, Johnny CA Connect, and please stay tuned for our upcoming session as well. Thank you.